So, you know, for me, I classify a channel as a type of range. It's not really trending. That's not really a trend. It's yes, it's going down, but it's ranging here. It's not going down very fast, and you can see it's having big moves up at the same time. So let's say that's a range right now. So the capital A, B, C, D is saying that if we break through this range, then we will potentially complete the cycle up here, which, okay, there's some usefulness to that, but right now that's not really useful to me. What's more useful is if I want to trade what I see now. So there's two things that I needed to have done. One is identify this range, which we've done, this channel. And then two, what we could have done is if we were looking down here and we were looking to maybe sell it here, what we would have wanted to do is we wanted to do as confirmation is to do the manual fib. So you draw a little line up and then you push in your script here and click OK. And that's a perfect sell right there. So had we done that, and this basically is, you know, you have an A, B, C, D, A, B, C, D, A, B. The market hasn't pulled back to its C. It's gone up fast. This is called a fade zone, okay. And it's here. So that's a sell. And most likely, the most probable situation now is that we're going to go back down to here. Now, the ideal scenario is that you sell it here. But obviously, we're looking at this for the first time. You haven't sold it, I assume.
Yeah.
So then you say, okay, well, right now, there's two reasons why I believe this market's going to go down. One of the reasons is that we've hit this channel resistance. The second reason is that the Fibonacci 90% of the time is going to reach at least this first red zone and possibly lower, but at least this first red zone. So you might argue that there is potentially from where we are right now, where we're looking from there to a minimum of here of downside potential. So between 108.66 and 107.34, what does that give us? 122 pips, 132 pips of potential downside movement from where we are right now. Had you picked it up here, you could have said it's worth 200, 300, 400 pips of downside movement. So anyway, we can't always pick it up at the perfect point. We're looking at it right now. So yes, this has been going up, but the evidence right now is pointing to the fact that we've hit channel resistance. We haven't gone back to the Fibonacci, so we should go really back to at least here. Now, if the past is going to repeat, then what's likely to happen, everybody, when you hit this line?
It's gonna bounce back there.
It's gonna go where?
It's gonna go down to I would say to the previous D.
Let's make this simple.
Yeah.
Because sometimes when we're clever, we think too much. Yeah. So if it hits the top line, what has happened in the past? Where has it gone?
To the bottom one.
Absolutely.
Yeah.
Let's keep it really, really simple. So in the past, when we've kind of hit this top line, we've gone to the bottom line. So if history is going to repeat, then we might say, well, this could actually go down here. But we just take it in steps. So what we want to do is we want to take this is a daily time frame, and now we want to go and see what the hourly time frame and the 4-hour time frame is showing, and then we can start to plan to take, down movements. And you could take small profits, and then on pullbacks, take down movements, and on pullbacks, wherever it ends up being, take down movements. So you're going with where we think it's going to go. So that's really the main picture of this. So does that make sense to everybody?
Yeah, it does.
Yeah. So if I just kind of move over now to a lower time frame, let's make sure we bring in the right chart, the dollar yen. So right now, I don't need to have all of those lines in there because we know the picture. It's already in our heads. Now, one thing we might want to do is we might just want to identify, what level is this, for example? It's maybe worth knowing 107.40, 107.30, and any kind of important support or resistance that you like there, that you've seen. But for now, just to keep this example simple, that looks like a really nice level. You can see here it's actually bounced here in the past as well. So 107.30. So what you could do is zoom out. We could go to 107.30, right? And we can just almost color this in to green. And that can become like a target zone for us. So now we can just start working towards finding potential opportunities to short this towards this target, okay? So we can go and put in our uptrend. So I'm just going to go to the bottom. Let's find where this trend started. So it's right there. So I'm just going to use the tool. You can also do this manually. Where's our uptrend lines? Just want to see if we've broken all of the trend lines. Let's zoom over here. Wow, look at that, guys. Just like magic. So so there's two things here. Firstly, we'll try and find a short opportunity. But if this was to kind of fall quite quickly, then we might be kind of entering these trend line support on basically where our target is. So, and obviously if it doesn't get there that quickly, then it won't. But if it starts to kind of go down quite quickly, then it will potentially end up there and probably get a bounce. So there's two types of trades right now. We can look for the short side towards this area. And then as it approaches this area, we could also look for a potential counter trend long trade. So for example, I would be looking to potentially buy it here and maybe just target somewhere there, old support. Just keep it really simple. So if we catch a nice short and the market comes down here with a few confluences, we might be looking to buy it up to there. So all of this stuff, guys, is like pre-planned. Like I'm not going to just think about it in the moment. This is really pre-planned. So I need to make sure I know where I'm going to make money already. I'm not going to let the market, I'm not going to react to what the market's doing. I'm not going to react to if it's falling aggressively or if it's going up aggressively or what kind of I'm already pre-planned. So that means that when it's happening, I'm already one step ahead of the game because I've already thought about all of this stuff. I'm already organized and I'm not going to hesitate. I already know that the probability is here. So anyone got any questions about that before I kind of see what we've got here?
Andy, I want to ask you something about the Fibonacci, the indicator. I watched it like 2-3 days ago and I didn't really understand how it works with the colors, because you said that if it goes like to the yellow color, it will retrace again to the yellow one. But when I did it on my charts, I couldn't do it like that. It didn't make sense to me. You know what I mean?
Yeah, that's fine. So you can, if you want to do it manually without the indicator, MT4.
No. I don't want do it manually. I just want to understand how it works when you put the one that show it by itself, because it didn't make sense to me. When I saw the video, I couldn't understand what you mean.
Absolutely, no problem. I will. I'm going to show you right now how to use it. So, firstly, let me look. Anybody else with another question before I go on to the next step? Okay, no, that's fine. Okay, so here's what I'm going to be looking to do. So this market is going down. Now, there's a couple of little things here that you have to be maybe slightly more advanced to see, but I don't know who's on here today. If there's any people that probably everybody's too busy with the crypto. Katerina's here. So what can you see? What can you see? Observe the difference between this and this. Anybody?
The first one is trading up and the other one down.
Good. That's definitely the one observation. Now think a little bit more advanced. What else can you see that's different?
Is that ranging now?
No, but you're closer to the mark. The first answer is correct. One's going up, one's going down. But what's the difference between the two?
The angle?
Yeah, who said that?
Katerina?
Yes, absolutely. The angles, and another way of saying it is the speed. So it's really important that we observe these things. So the speed of the market on the way up is faster than the speed of the market on the way down. So this is at the moment, even though we've looked at the daily chart and we've said, you know, based on the past, this market could go much lower, and it could. We have to also look at this and say, well, just from this chart alone, there is definitely, like, this is not a downtrend yet. So this, for me, at the moment, we're looking at a retracement, and you've got to be very careful when you're shorting retracements. So look at the way it's gone up, and look at, can you see, like, can everybody see the difference or not? Like, this is not like a clear downtrend yet. This is the speed is kind of, it's saying retracement. There's a difference. So retracement is basically a pullback before an upside move. So I have to observe this stuff. So we can't be blindsided and say, oh, we definitely got to go down and we definitely got to short it. But it doesn't mean you don't short it either. But what it should teach you is that if I am going to short this, maybe I need to see a bounce. Maybe it's got to be the top of resistance. But also you've got to be aware that we could push higher before we push lower. So let's draw some lines, guys. Okay. So here's what I'm going to do. I'm going to draw the obvious. That to me is obvious, right? Why is it obvious? Because I can clearly see we have, let's count them. We've got 1, 2, 3, 4, 5 touches. That's what we want to see. We want to see a really nice line of best fit, which is really clear. And then you want to try and see if we can create a parallel. And it doesn't need to be perfect, but just where the market is reacting. And that there, it doesn't matter about that. That's like a fake out. It's just gone back into the channel. Can everybody see now that, look, it's perfect. 1, 2, 3 touches. That's where we are. And we are kind of on the bottom end here. So do you think it makes sense to sell it here?
No.
No, it doesn't make any sense. If we're going to sell it, if we want to sell it, where would make more sense?
On the top.
At the top line. That represents at least decent value. So the fact that we're not going down super fast, you shouldn't be playing momentum in this kind of market. So context, guys, is so important. And I know some of these things, this is a bit more advanced for, especially if you're a beginner, but we've got time. And I want to put these concepts out there for you because it's going to make all the difference when it comes to your success. So sometimes when the market is breaking down fast, consolidation, and looks like it's going to break down further, you can play momentum. You can get in on momentum and sell it. But that doesn't really happen too much in FX. It happens on some currency pairs, sterling or euro or sterling Kiwi, these kind of bigger ones with big ranges for the day. But generally that doesn't happen a lot in FX. And the observation here is anyway, is that this isn't falling down very fast. So we might want to see if we can pull back. And what else, guys, can we look for as a confluence? Because we want, remember, it's the rule of three. If we want to sell this, we need three reasons. So reason number one is it could be this channel resistance. You can also include the daily time frame as reason number two. You need at least one more reason.
Support resistance lines for the time frame.
I'm going to put my volume up because I didn't hear you. Say that again.
Support resistance lines for confirmation of like click the top. I said support resistance and it's coming back down again.
Yeah, absolutely, James. So we can put in, if I heard you correctly, support resistance. I'm going to just have a look a little bit here. That looks like an okay level there. So you got some support, and then that can become resistance like there. So around 109.22 looks like an interesting area. And why don't we also now put in the Fibonacci, and then I can tell you what they mean as well. So let's drag the indicator in, and we want to see where we are in the cycle. So I'm going to zoom in so you can see it much clearer than that.
Andy, can I ask you one thing before that?
Yes.
Isn't another reason that because we break the trend line, so we know it will go to the other one at some point?
Yeah, so that's why I said before. So the other reason could be this one. Is that what you mean?
No, the trend line above that, the red one. Zoom out.
Yeah, absolutely. Very good point.
You know what I mean now?
Yeah.
The other one. Okay.
I agree with that. Yeah. Ideally, you want to find a confluence point that has at least 2 points, 2 reasons why you're getting in, though. So yes, this can definitely be another reason that there's an 80% chance that we're going to get to this line for sure.
Yeah.
Good, very good point. But ideally, when you're entering the trade, you want to have at least 2, ideally 3 points of why you're entering right now. So we have channel resistance, we have this kind of horizontal level here, and then the Fibonacci. If you look at the Fibonacci, you have the 38.2, which it already got to, the 50, the 61.8. Which is the best one that I've said before? Which is the best one to get in on?
61.8.
61.8 is the best one. If you can get in on the 61.8, that's ideal.
How you see the difference?
So the difference is that it's the third red line.
Okay.
It's the so this one is the 38.2, the first one. Actually, if you hover over it, it tells you, I think. No, it doesn't. It tells you the opposite.
It doesn't.
No. Don't worry about that. It will confuse you more. So this is the 61.8, the third red line. Okay. So you might say, well, look, that's quite close. So it could easily do this, like it could easily spike into the 61.8 and then start to turn. So if it stays in this, to answer your question, if it stays within this red zone here, then the target will be this red zone here. If it goes a little bit deeper, so if it goes up here, for example, maybe it goes up aggressively and it hits this yellow line, then the target's going to be the yellow. Now, one thing that I would also add to this is if you're looking, say, like, oh, I might take this today, I would definitely add in the daily trading range to see, firstly, how well that's been holding, and then obviously to see where it actually is telling us that it's going to get to. So hold on, why did that not load? I don't know what's going on today with my. I don't know about you guys, but I don't often close my PC. It's pretty much on 24/7, and I think they need to close to update, and it just sort of seems to be playing up today.
It does happen to me when I have too many indicators open. It just like it takes a while to open another indicator.
It shouldn't be doing it though. Not on this PC. It's super powerful, but I think it's because I've literally had a million things open. I haven't closed the PC for so long that I think it needs to, you know, I'm not a techie or anything, but I think that's what they say. But look, if you were looking to trade this, I'm gonna remove the fibs just so we can have nice clear chart. But if you were looking to trade this today, well, you can see here that the DTR is basically saying that that's probably going to be the high of the day. Now, what you can do is, if you want to be a bit more sure and you want to get a really good price, but it reduces the chance of you getting filled today, then what you need to do is you need to look over here, and if you observe this red line and notice how often we've breached it in this down move. So we can start from here. It went slightly above it there. This was the high there, and other than this one, it's not got up there that high. But if we want to sell a high point, remember guys, as we said, this isn't a strong downtrend. So you might want to say, well, look, I want to get a really, really good price on this one. So you could be the trader that only trades on really good prices. Like if you don't get that top price, you don't take the trade. So obviously sometimes you'll miss the trades. But if I just adjust the indicator, I'll show you what that would look like. So okay, so you can see now that this, with a 1.3 multiple, that the only time we had a really strong move up was here, and it would have been the high of the move up, and then it reversed. So what you would then say is, okay, well, I'm going to put a sell right there today, just valid for today only. That level right now is about 109.31. And if I just put in my fibs down again, let me just bring them back in. 109.31. And the 61.8, guys, is 109.27. Can everyone see that if you put a sell limit today around 109.27, if it got there, that you are in a super high probability setup for the day?